Welcome to the Inner Circle Boardrooms Backstage Pass. My name is Kay Chohan. We're powered by ActGlobe Research. This is the platform you'll find me in discussion with investors and boards, and some of our own associate partners as well. I'll be unpacking their views into the latest investment strategies, shifting operating models, and restructuring for future strategic capital growth. I'll also bring you the latest thinking into the market gaps and opportunities. Today, I'm inviting back John Anderson, who's an associate partner and a real estate veteran. He's experienced in large-scale redevelopment and change of use. John, for those of our audience that have not met you before, could you kindly provide an introduction, a bit about who you are and a bit about your background?
I've been in the property world now for too long, 50 years probably. For the last 20 years, up until March 20, I was with the Berkeley Group as regional chairman, responsible for a number of projects, but certainly the two largest regeneration schemes in the Royal Arsenal in Woolwich and Kidbrooke, also in the Royal Borough of Woolwich, Greenwich. I retired, as I say, in March 20. I then took on a number of non-exec roles. I'm chairman of Curtin & Co., who's a public affairs and political analysts company. I'm also non-exec director and chair of development committee for Platform Housing Group, a very large housing association covering the Midlands and East and West. And they have about 45,000 homes under control and management. I'm also non-exec director of 60 Bricks, which is Waltham Forest's development company. And recently I've taken on an advisory and non-exec role with CZWG, an excellent firm of architects in the city.
And I know that we'll be keeping you busy as well. As I mentioned, we've had you here before discussing developers shifting strategies during a pandemic. Now, we know that many commercial real estate owners have seen huge declines, and we can expect to see a lot of changes over the next 12 months. There'll be new players who'll be looking to enter the market to replace some of the old. For those of you that may be not aware, we're often engaged with asset owners across the globe looking to strategically reposition their portfolios so they can essentially uplift and optimize and strengthen their financial position. So we've decided to make this video to share some of the conversations, but also provide some insights around how to start thinking about repositioning some of those assets, particularly for future capital gains. So I hope you guys find this content useful. If you do, please don't forget to like, share, subscribe. Don't hesitate to also reach out to us if you'd like some more content around some of the conversations we're going to have here today. Now, we're going to provide some real life examples around how to reposition those assets. Let's kick off, John, because there's a lot of people with different asset classes. Let's start off with retail first. Let's assume I'm an asset owner and I've got some non-performing assets. I'm looking at how to start repositioning them. In your opinion, what should I be thinking about?
Retail assets have been a problem for a while. I mean, this isn't new, that the high street is changing, has been changing for some time. What the pandemic has done is just speeded up that process. So what the asset owner needs to be looking at is, what are the opportunities I have for alternative uses? What can I do in a specific area? And there's no magic wand that you can wave and say, this is how you change a retail. It has to be dependent on where it's actually located. So first of all, you should analyze your assets. You should actually make sure you know exactly what assets you've got and what your liabilities are and what your potential profit stream might be. So a lot of investors may have freeholds, some may have leaseholds, some may be in older sites, some may be in very modern schemes. So first of all, analyze and be honest with what you've got. Then as an investor, and this cuts across pretty much everyone, understand what it is you want. Have you been looking at, and are you wanting a rental income, or are you looking at a capital stream, a profit? So your company's probably structured in a way from a tax point of view to cover one or either of those two things. Then it's a case of just analysing the options on each individual one. And that is, I mean, that's where people like us come in, because we can take that view, we can consider it and we can look at it, provided we know what the investor wants. I was talking to somebody recently about a property and they were saying, oh, I can't get it to make any money, I can't do this, can't do that. I said, well, my advice would be to see what's happening in your area. Perhaps you can pool a few other people together who have the same reason, and we could probably sell that as a big site and you can get a development going. And then out of nowhere, that client actually turned around and said, yeah, but this has been my family forever, I don't want to sell it. And that changes completely the dynamic of how you look at it. So getting the advice up front and working with all of the information, I think, is fundamentally important.
Is there any blind spots that you see that they should be thinking about? You know, we've been having discussions around whether we should be looking at repositioning those current assets and then grouping them on when we're looking at the refinancing strategy as well, so we can actually go back to the banks and say we're going to be changing the use of those assets.
Amazes me that people don't. When you ask them what their assets are, often they don't have all the details and all the information, so that's quite interesting. The other thing then is to look at each individual property on its own and see where it's positioned and what sort of uses could be coming through with it. And do you talk to your neighbour? You might find that sitting next to you is somebody that actually needs space. And again, I'm amazed that this doesn't happen. But if it's not your core business, why should you? Why should you be thinking as a property developer or a property person, when actually what your business is a supermarket operator or a car dealership or something else, whatever it might be. So I think it's doing that initial piece of analysis. What I've found when I've looked at these things in the past, if you looked at 25 properties, there's probably 5 or 6, maybe 10, but 5 or 6 in today's world that are quite easy to think, we could do this, this, and this. Then there's others where you think, right, well, that's going to be a change of use. So we need to be starting to think what other uses will work in that location, having conversations with the right people in the council. And sometimes it's not the planning department, maybe it's the local councillor or somebody else. And that often picks off a substantial number. Then you'll be left with some that it is almost impossible to know what to do with in this initial time. And I would put those on the back burner and not think about them again until you've dealt with the others, because you might just be spreading yourself too thin. And I'm talking about the company now, not the advisors, because you've got to make decisions. So it's easier to bring your 25 down to 15, down to 10. You've then got 5. Well, actually, what we could do is we could put those all together in a company, put a couple of good assets in and sell the company, and somebody else will work that. Or there's a retailer out there who's got this idea as a pound shop or whatever it might be, where we'll happily do that. And of those assets, there are still often uses that you can put them to for charity uses, community uses, or something in the short to medium time to actually just cover your costs. So there's no one answer, but I think that's how systematically you should go through.
You've raised a really good point there. My thesis has been, if you've got non-performing assets in its current class, well, if you reposition those, you can uplift the value. And because there's going to be a lot of assets on the marketplace being offloaded, my thought process around that is you're just going to be amongst so many others who are depreciating the value of those assets because you've all got the same assets coming onto the marketplace. So there's a lot more supply, so to speak, and not enough demand for those asset classes, that if you actually change the use, which will take a bit more time and maybe a bit more investment, as opposed to just going into the open market and trying to offload those.
I think offloading is a problem. Unless there's some USP in there that you can actually say, oh, this is why that should go very, very well. And as I say, there might be some low-hanging fruit there that the next door property actually is looking to expand, for example. So that's a simple one. The others, it does take work, and it does take a much more detailed analysis. What you should be doing is, what I would be doing is looking at the property. It depends on its size as well. If it's a small 1,000 square foot retail unit, then that gives your options. It's difficult but then the ups and downs on its values won't be as great. But if you're sitting on a substantial property, you should know what is happening in that town. What is happening to that area? Is there a new transport link that's being proposed? Government is looking at investing something like £4 to £5 billion in town centres and other regeneration schemes. Is your property in one of those areas? You should know, you probably don't. And I think there's 100 towns already been picked, and there'll be others that are coming through. You need that knowledge before you start making commercial decisions, because in those instances, it might be better to look at a short-term use of your property for 2 to 3 years, financing it in a way that it doesn't create a problem on your balance sheet, and then you're going to be able to sell or be part of a bigger scheme in the future. If you're looking for rental income, then you might see a substantial rental increase in 3 years' time. So fund it on a basis that, for the next 3 years, I'm covered. I've looked at the issues and the problems, and then in 3 years' time, my rent should have doubled because there's a new station coming, there's a town centre scheme, a big new hospitality area coming. Whatever is going to be coming through, a number of these government initiatives.
Let's just stay with that thought for a second, but flip it slightly. If I had something like student accommodation right now, in your opinion, what could I be doing with something like that to uplift and strengthen the value?
With your student accommodation, again, it does go back to, is the company looking for a return, an annual return, or is it looking to build up a portfolio in a capital terms and then sell that portfolio on? And those are two just extremes of ideas as to what companies might be doing. The other thing on student accommodation is to understand who's taking the head lease. So what is the tie-up with the university in that area, and how does that work? Because sometimes there might be restrictions in there that you'd have to take forward. So you just got to understand your asset. And then I think we've got to understand the marketplace is what is going to happen to student housing in the future. So is it a short-term or medium-term issue? But then it's a case of doing a much more detailed analysis of the physical building that's there and how can it be converted. And this is where most companies should take professional advice. Most organizations that have student housing have some idea of how buildings are put together, but not in the detail that's required, because the other uses that you might be thinking of there is housing. So how does it work? Or can you convert it into apartment blocks and things like that? Is there a use there for a care home or some sort of use, because they're the sort of small rooms that would work for that? Can it be converted into a hotel use or that type of hostel use? Could the ground first, maybe second floors be into a community use that then actually allows the rest of the space to work? Can you have it as some sort of office or business uses? But who knows whether that building can be converted to take that into account.
Is the investment of cost versus return. The market's in a very funny place at the moment because we've got a huge amount of quantitative easing going on. You've got interest rates are low at the moment, with the fear of potentially bonds going up. And if you've got a huge amount of assets at the moment, I suppose what I'm trying to understand is, could we see a level of inflation there for the assets or more of depreciation of those assets? I'm trying to get a real economical standpoint of, if I'm an asset owner, how should I strategically be thinking about those portfolios? Should I be thinking about just the change of use, or should I just be offloading those? And I know we've spoken about figuring out which ones are non-performing, where you've got the regeneration, but I'm trying to figure out, is there more to it that leaders should be thinking about strategically?
Yes, they should be thinking. I mean, I think every company should now be doing a complete analysis of the assets that they have. And I think there's going to be an element of repositioning. And you mentioned it earlier. Personally, I'm really positive about the future. And I think that there will be change, and I think that there will be a lot of new investors and developers and buyers and companies coming into the market that possibly, for the right reasons for themselves, they're sitting on a cash pile. You know, they sold out at the right time, just before all this happened, and they're sitting there thinking, well, where am I going to move to next? So if you're a landowner with non-performing assets, you've got to think that there's also buyers out there, or there's people that want to work with you out there. They may not be, they might want to do some joint ventures. They might want to do all sorts of things. So it's keeping an open mind and also keeping a lateral mind. But I think that every CFO, CEO out there should be actually analyzing what assets they have. There are going to be a lot of companies out there thinking, oh my God, we're sitting on horrendous borrowings here because of what has happened to us over the last 12 to 18 months. But also a lot of those companies weren't performing particularly well when all this started. So they have to remember that. And they can't just blame what's happening now. They can't blame Brexit. They can't blame the pandemic. It's like change was happening before all this started. It's just become quicker. So the decisions, go back and have a good look at the decisions you were making there. There's probably quite a number of assets that weren't performing well. Well, they're not going to get any better. So let's just deal with that straight away. Equally, there will be some assets that are working incredibly well. Understand why, make the most of those. And often it's a case of expanding in those areas. You might be the one that buys the shop next door or 3 shops in a parade because it's better for your business. So you might have very excellent performing assets and poorly performing assets. Same with your student housing or any of your other assets. Then I think it's key, if you had a policy back 2 years ago that you were creating a company that you wanted to sell in 5 to 10 years' time, well, that's probably still the same. So how do you review what's happened over the last 2 years to that decision that you were having there? Does it extend it by 2 years, or do you bring it back and say, look, all I want to do is create an asset value that in 5 years I'm selling? So you just need to take that on board and get the right advice and help to see how can I maximize my value in 5 years. And that might be having assets in the right location. We are moving, we're changing, we're going to have greater demand, everyone is telling us, for care homes. But I think there'll probably be a different type of care home coming through as well, where people can actually move into where they don't, when they both a couple need care, they can actually one or the other. So it's sort of like an extra care facility. So something new will come out that you can say, well, why don't we position ourselves there? In 5 years, this market is going to get big. Great time to sell. You don't want to sell at the top. You're selling as it's growing.
When you want to sell, you want to sell at the top. And I'll give a real life case study again in the hotel sector, had some assets, got that use of class. They were hit, and there's going to be a lot of people hit in this turmoil as well, but they sat on the land, and the hotels still exist today. Now the challenge there is they're looking for a sell today. Again, to my point, when you've got so many hotels that are going to be looking to sell, what's the value of that asset now compared to 2010? If you were advising that business back then and even looking at the scenario now, what should have that business done in the last 10 years? And I say this because, again, going back to my point, there's going to be asset owners right now. They're not going to be too sure whether to sell right now or whether to change the use or whether just to sit on the land because the level of investment goes into it. John, what should they be doing?
The whole thing about change of use is that if you get a planning consent to change the use of something, let's say you change its use from a hotel to an apartment block. Or a care home, you get that change of use, planning consent. You have to implement it for it to be a change of physical use of the land. So just because you get a piece of paper doesn't physically change the use of that land. So what you're doing is you're taking an asset that people don't know what they can do with. You're coming up with an alternative. So you're then offering it to the market with 2 uses. You can either have a hotel or you can go for a residential. And often in you're doing your marketing, you say, look, it's a simple residential or hotel, but actually we know in talking to the team and the planners, you could also go for student housing or you could go for a care home. Now you're selling something to a bigger market and a greater interest. I think if you try and sell a piece of land and say, I think it could be used for this, this, and this, you're going to get 50%. So by establishing a greater value, it's not something that you, the landowner, are going to do. And you don't have to implement it. So you can still go to the hotel market if you believe that's going to change in a year or two. So you're just covering your bases. And often from a pure balance sheet point of view, the change of use document will allow the land value to be established and increased. Yeah, so if you've got a derelict hotel that's sitting on a site, it will have a lower value than something that could be cleared. So you could just change that use in your balance sheet. You can increase your borrowings against it for a period of time. So it's looking at the holistic.
From a real estate point of view, what are the positives we can take away from this pandemic?
I think the positives are that we've speeded up the change that was taking place. And I think in doing that, that's going to bring the new players into the market. Those that have probably over the last few years been on the fringe. And these could be companies with substantial funds. We know that the online retailing is changing. And we know that that will have an impact on our high street, both negative and I think positive. We know that people are resisting some of those online shopping issues about, I had it yesterday, I've got something being delivered, a bit of furniture being delivered, which meant I sat in all day waiting for it. It finally did arrive at 7 o'clock last night. That's unacceptable. There's got to be a new way that we either revise how things are being delivered, or that we have drop-off centres, or we have, and I'm talking to a number of people about local warehousing almost, things like that. So change that was there is happening in that field. How we use an office is now dramatically changing. Most companies I'm talking to, most companies I'm involved with are looking at 3 days in the office, 2 days working from home, or the reverse of that, converting a lot of offices within the building into meeting rooms and group get-together areas, having more social things going on in the office as well, so that actually people can be there and they can share their leisure time as well as their work time. So I think that whole design is changing. I think you'll get a lot more of the WeWork type business structures where companies work out of a space that they're not there all the time, but when they are there, they interact with others, and you'll get a lot of startup companies coming through in that way. How we use our homes is going to change as well. Interestingly, we had a major shift a few years ago to have the big open plan spaces. So your kitchen and your living room and everything else is all one. They keep telling me a lot was driven from the sort of Friends TV series where that was great. Everyone was living in this one space. The resistance of that now is that if you're working in your living room, as we are now talking to each other, then you've got somebody in the kitchen part of it actually making breakfast. Yeah, 20 past 11, it's brunch. But you know, it's that sort of thing that actually now we're looking at having to change how that design works. Our hallways have always been weird spaces in houses and flats. Do we make those actually slightly bigger because they then take a study? And I think there's change happening everywhere, but I think it's exciting. And I think how we design our buildings, everyone wants outdoor space now. You're locked down in a flat with no balcony. I mean, that must be horrendous. So I think it's exciting. The negative is we're probably going to go through a very difficult 12 months. Furlough is going to come off. Unemployment will go up. People will see what their borrowings are, and hopefully the hospitality sector will have a boom when everyone's allowed to go back into bars, restaurants and shops. But is it going to be enough to cover the interest charges on the debts? And hopefully interest charge will stay low. Otherwise, that's going to increase that problem. And that will be over the next probably year, 2 years. But you will get people that are going to, in the hospitality world, you'll get people that are going to coming in and buying up chains. Get rid of the debt, and we're in there.
How should asset owners be strategically approaching and thinking about their repositioning of commercial real estate so they can start thinking about how to uplift and optimize the value post-COVID?
I think the first thing that any investor, investment company or trading company should be doing, it's not, we've said it before, but they should analyze what they've got and what they want. So what assets do they have? What are they sitting on? And what is the commercial desire that they're looking for moving forward? Again, I'll say, is it a rental income or an annual income, or is it a capital receipt, or are they trying to build something for potential sale in the future? And those three decisions should influence the advisor's advice. So I think, and I will always suggest to anyone that is working with a company, make sure you 100% have got your client's brief correct. And one of the roles that people like us can bring to that is that we can challenge some of those questions, because there are tax implications as to some of these. Take a loss for 2 years because you've already got your profits, you can play those back and actually going forward. Is it a capital gains issue that you're going to be beset with in 5 years' time? How do you mitigate that from now? So you're looking at that, and it may be in a large portfolio, you're doing all of the things that I suggested, that you're keeping a rental income because that pays for your own costs. You're taking some capital receipt, but then you're looking at a long-term capital or rental receipt coming through. And then once you've analysed and you've got to that, each individual property asset is going to be different. You could have exactly the same building in a different area, but the political persuasion in that area is such that actually the change of use won't work. Or what you think as a landowner will work actually isn't what's going to happen on the ground because of something that's happening politically behind the scenes. So you do need local knowledge.
There's a lot of asset owners that have been doing what they've been doing for a very long time, and now they have to reposition themselves. They may not have the skills and capabilities within the teams as well. As an asset owner, where do I start?
Well, I mean, I think I would say, wouldn't I? You'd come to people like us. You'd come to a team of, you could go to the large companies. You could go to the KPMGs, Ernst & Young, someone like that. The trouble is, are you going to get the experience that you need for that hands-on advice? Because a lot of corporate advice and a lot of corporate employers are still doing catch-up. And I think it's important that you want to make sure you've got somebody that has local advice or knows how to get it, knows how to ask the right questions. I'm quite excited by being chairman of Curtin & Co. This is political analysts. We've got lots of different political people working within the organisation, ex-leaders of council, ex-MPs, people like that. But what they do, each one of them has a little black book. So long as you cover each of the political parties, the little black book helps you to actually just make the right questions to the right person. And it's that right question to a right person. Just digressing slightly. The other hat with my housing association, we've just got a planning, or the builder we work with, planning refusal for 100% affordable housing. And everyone would say, but that's impossible. Everyone wants affordable housing. Why would that work? And there were lots of issues going on behind the scenes, which we should have picked up on. They should have picked up on and changed the way in which you described it rather than the planning consent they were trying to get. And often that is often the words you're using, or sitting down with the right person and saying, I understand your fears. Let me show you how I can allay those fears. Care homes is a good example of what runs with a care home is a lot of support from the local authority. So if you haven't sat down with a local authority team and said, this is how it works, we are going to bring 50 people together in one area that need you to look after them in one way or another. Maybe it's the doctors, maybe it's a health authority, whatever. But actually by bringing those 50 together, we're actually saving you money in the local authority, your people don't have to go to 50 different houses. They come into one. And it's like, oh, light goes on. I hadn't realized.
You make a really good point about skills and capability, whether you should get specialist knowledge or diverse expertise. It's great to have specialist knowledge. Having quite a diverse portfolio where you can tap into different areas, times like this when you really have to pivot, really do add a lot of value. Where do you often see blind spots in the strategic planning?
From a client's point of view, sometimes their thinking is too narrow. Also, they might be living in the past. There is a change happening, and we have to embrace that change, which is why I, for one, will never call myself an expert on anything. We've got the green agenda now happening. We've got everyone talking about zero carbon homes and things like this. My normal question when I talk to somebody is, could you please define what you're talking about first? Then I realized that actually I know quite a lot about it, but there are experts out there that I would bring in to be able to refine the information that's coming through. If change is happening, you just need to make sure you're talking to the right person about what that change means, but talking to them in a way that you can challenge them. So most consultants, when they come and talk to you about something new, are buzzy and want to tell you all the great things about it. The first question I always say, what don't we know, or what is likely to go wrong? What are the negatives in what you're saying? And from there, we can actually change that to be much more positive.
How do approaches differ for asset owners with, let's say, 5 units to 25 to 100?
I like to bring everything back to simplicity. So when you're looking at somebody who's got, let's say, 100 assets, no one's mind can work across 100 assets. So it's sort of bringing that back down to manageable numbers. And maybe, I'm not saying 5, but maybe you're bringing it down to that sort of 5 to 10 every time. And because there is no one answer that covers everything. And unless you know from other experience that somebody else is in the marketplace and wants to buy that company, then that is a way that you can often sell 100, but it's unlikely. So it's just doing the background analysis in the same way for 5 or 100. And then you'll see quite quickly where you can get some instant results and how you can then move forward in a way that you're taking them out in chunks.
And John, we've spoken about taking out the old, so to speak, and bringing in the new. Changes constant right now. If I'm an asset owner looking to repurpose my portfolio, what type of skills and capabilities do I need on my team now to get the job done?
It depends whether you're thinking your team being people you employ physically in your company, or whether it's the advisors that you're bringing in to sit around you. I don't think companies should have young, bright minds in there. So if you're sitting there with a company, you should be looking at who you can bring in that has the ability to do some lateral thinking, that assists you on a day-to-day basis. But actually, what you need to be doing is having the right advisors around you. Those advisors, as I've said before, are those that have the right contacts to be able to bring the people in from all the different spheres when necessary. I think sometimes you talk to somebody so specialist, all they can think about is one alternative use. And that might be great for 20 or 30% of your assets, but it's probably unlikely to be great for every one of your assets. So you need people that can advise you, that have got that range of knowledge and experience.
And how should they be thinking about the redesign, and what steps should investors be taking in order to successfully execute?
I think that's where, if you can get a link with a design practice, design people that have got that experience and broad experience of most uses, not that they're just experts in hotel design or whatever else it is. Because if you go to somebody who's got a one expertise, then they're always going to be thinking in that way. So you need people around you that have got that same sort of lateral thinking, and those advisors you need to make sure like that as well. So when you're looking at a specific building, it's good to sit down with a designer over a 1 or 2 hours and just say, look, throw some options at me, throw some ideas, and then just bounce those around. Now, if the landowner company hasn't got the experience of being able to work with the architects and others in that way, then that's where they should be working with people like us. I love getting my hands dirty on detailed design of buildings.
And where do you think it often goes wrong? Is it the strategic thinking or the financial planning?
No, I think it's a bit of both. But I think in the strategic thinking, and I had this experience recently, talking to a client where we came up with a fantastic solution for one of their problems. He then immediately thought he could just roll that out across the whole company, and came back a while later and said, doesn't seem to work in this location or that location. The answer is, well, no, it doesn't, because you haven't got the political background there that will actually support what you're trying to do. Or the reason it worked in this other town is because they've got a station sitting in the middle of the town. None of these others have. So it actually is making sure that you look at the issues, and your client shouldn't be thinking it's one hat fits all. I mean, it doesn't. It has to change with as you're going through. And the political side to what we are doing has always been and will continue to be an issue in this country.
Is it all about who you know as opposed to what you know?
There is an element of that, but I think it's also an element of sitting down with the decision makers and helping them come to the right decision. And that's often because you go into areas and there's a preconception about what is the right solution or what often is the wrong solution, the NIMBY world that we've always been living in. But it's the way that needs to be described. A failing town centre actually wants a lot more residential space, because what residential space brings is spending capacity. So when you actually look at why is a town centre failing, it's often because everyone's been moving out, and the only ones that are left are those with no spending capacity. So let's change that. Let's make that work in a different way politically, and that's the big picture. But my picture is I want to build 30 houses or something like that. So you're allowing somebody to, you're assisting them in changing their initial view on what was happening. So yeah, that's important.
Let's talk a bit about planning constraints. What are the biggest planning constraints you see when you're looking at the change of use? Let's just use an example of retail to care homes.
It's just local, and it's localism that you have to be very aware of. If you're making a planning application, you should first of all analyze what the view is of that local authority. So what's the thinking behind their plans, and what does their plan look like? So quick analysis of their plans for the area. If you're then doing the change of use that you were thinking of, then again, an economic analysis of the age of the population in that area. If you're trying to put a care home into a very young, vibrant area, it might not be successful. It might be more difficult to convince the local authority. However, if you've got an aging population, and one that potentially has become an aging population, then you're meeting a demand that the local authority might not yet have thought of.
So current views on the commercial real estate asset portfolios and performance.
Gosh, that's a big one. I need a drink. Actually, I wish that was vodka.
I hope that has got vodka in it.
No, it hasn't. It is just water, obviously, at this time. It's one of those, I'm not sure there's an answer. Well, I'm not sure that anyone knows the answer. And I think that's part of the challenge and the opportunity as we move forward, that change was taking place in how we live, how we work, and how we spend our leisure time. And it was changing. It's now gone through quite a dramatic difference. I'm not saying change, but difference over the last 12 months. Some people I talk to say, well, yeah, but in about 12 months, 2 years' time, it'll all be back to where it was. Nothing will have changed. A lot of others are thinking, and I probably put myself in this camp, the change was happening and now it's going to be happening. It has happened quicker. Therefore, there'll be a permanent change and also a bedding down, and that bedding down will also make some alternative changes as well. So how we live, people will now be probably thinking more about homes with gardens and the additional bedroom, which is a study. So the 1 bed, 2 beds is probably going to be more difficult. The 3 bed, 4 bed is where we should be designing. And if we're going multi-story, then there needs to be outdoor space that goes with it. So balconies or larger terraces as we step buildings up are sort of a design there. When it comes to where we work, then I think it's going to be looking at how the office changes to allow people to work from home and work in the office. But actually that then makes a major change to our communication system as well. You won't have commuter trains in the morning and evening. It will be people going to work all day long. So that timetabling will change and capacities are likely to change. So that have an impact there. Bus routes will change because more people will probably be using buses during the day because they'll be going in and out of their office on a more limited basis. And then our leisure, I think, is something that over the last 12 months, we've all become to appreciate a lot more. So I think that how leisure facilities are going to change, and that ties in with hospitality. And then on the edge of that, you've got the care home, the medical facilities, the education facilities. It's a buzz, but it's a change.
Yeah, I just found it fascinating that you said that some people don't believe change is here, and they typically say it takes about 30 days for change to happen. And I think we're on about 200 days at the moment. Yeah. So let me just end with this. In terms of best areas to repurpose and invest in 2021, where do you think is likely to perform strongly for capital growth in years to come, in your opinion?
I do think that the major cities are going to struggle. So it doesn't matter which city it is, whether it's London, Manchester, Liverpool, Birmingham. I think that there needs to be some repurposing going on in those areas. And what was the commuter zones around those areas, I think are going to start to see a bit more of a, I don't think I would say a boom, but let's just call it a mini boom for now, because I think people would rather live in those areas, and often those areas are cheaper to buy homes in and things like that. But you don't have the downside of the season ticket commute costs, because you're not going to be doing it quite as much. Companies, if they want people to work 3 days a week, may have to start covering those costs in a slightly different way. So I think I would look on the edge of the larger towns, and particularly the edge of the larger towns where there is still good communication. And I think you will start seeing some increases in demand in those areas, and that increase in demand should stimulate the retail side as well, things like that.
Do you think companies will start moving out to other areas? Like, for instance, we've always said that places like Nottingham, Liverpool, Greater Manchester, and Leeds, Sheffield, do you see those areas being as up and coming?
They're going to have to reinvent themselves. All those towns you've mentioned have to be sitting down now doing master planning to think, how can I encourage people to come back into the centre? So other things have to happen to stimulate that. So that's where the hospitality world comes in. That's where the community and civic centres need to be more opening, so that you want people to have a reason to go in. And it's no longer that they're going there because they work there, because they won't be. 50% of that will be reduced. So as that 50% reduction happens, it's going to have a major impact on the income for hospitality, unless you stimulate somewhere else with theatres or something else that's happening. But you want it to be a 24/7 economy to make that work.
Fab. Look, John, always a pleasure to have you here, and can't wait to bring you back. And I know we're in conversation with some of our clients in regards to them looking at their master plans and how they can change some of the use for capital gains. Hope you enjoyed this conversation. I hope you got some value from it. You can reach out to either myself or John. Always happy to have a conversation around what the future is going to look like. If you're looking at maybe just putting some heads together around potentially how you can change that use, bringing in other parties into that conversation, get in contact with us. We'll be happy to support you in putting that group together so that you can start looking at your assets and looking at what the future is going to look like and what that impact is going to be. See you at the next video. Thank you. Bye-bye.
Thank you, Kate. Really good. Enjoyed it.